Financial markets are like bustling marketplaces, but instead of fruits and vegetables, they trade assets like stocks and bonds. These markets connect buyers and sellers, allowing them to exchange these assets and determine their prices. Think of it as a giant auction house where people can buy and sell pieces of companies or debt issued by governments. Financial markets play a crucial role in the global economy by facilitating capital allocation and driving economic growth. Imagine a world without financial markets. It would be difficult for companies to raise money for expansion, and governments would struggle to fund public projects. Financial markets act as intermediaries, channeling funds from those with surplus capital to those seeking investments. This flow of money is essential for businesses to innovate, create jobs, and contribute to overall economic prosperity. In essence, financial markets are the engines that power economic growth, connecting investors with opportunities and providing a platform for businesses to thrive. Understanding how these markets operate is crucial for anyone looking to participate in the world of finance, whether as an investor or a business owner. The stock market is perhaps the most well-known type of financial market. Here investors buy and sell shares of publicly traded companies. These shares represent ownership in the company, and their value can fluctuate based on various factors, including company performance, industry trends, and overall market sentiment. When you buy a share of stock, you're essentially buying a small piece of that company. If the company performs well, its stock price is likely to increase, allowing you to sell your shares for a profit. Conversely, if the company struggles, its stock price may decline, resulting in a potential loss. Investing in the stock market can be a rewarding way to grow your wealth over the long term. However, it's essential to approach it with caution and a well-informed strategy. While the stock market grabs the headlines, the bond market plays an equally important role in the financial world. In the bond market, investors buy and sell bonds, which are essentially debt securities issued by governments and corporations. When you buy a bond, you are lending money to the issuer in exchange for regular interest payments and the return of your principal at maturity. Bonds are generally considered less risky than stocks, making them an attractive option for investors seeking a more stable income stream. Government bonds in particular are often seen as a safe haven during times of market uncertainty. However, it's important to note that bond prices can also fluctuate based on interest rate movements and the creditworthiness of the issuer. The foreign exchange market, or Forex market, is the largest and most liquid financial market in the world. Here, currencies are traded against each other, with trillions of dollars changing hands every day. The Forex market is driven by factors such as interest rate differentials, economic growth, and geopolitical events. Imagine you're planning a trip to Europe and need to exchange your US dollars for euros. You'd participate in the Forex market, albeit on a small scale. Traders in the Forex market profit by buying currencies at a lower price and selling them at a higher price, capitalizing on these fluctuations. However, Forex trading is highly speculative and requires a deep understanding of market dynamics, risk management, and technical analysis. Section 5. The mechanics of trading. To start trading in any financial market, you'll need to open a brokerage account. A brokerage account acts as an intermediary between you and the market, allowing you to place orders to buy and sell assets. Think of it as your gateway to the financial world. Once you have a brokerage account, you can fund it and start placing trades. When you place a trade, you're essentially instructing your broker to buy or sell a specific asset on your behalf. For example, if you want to buy 100 shares of Apple stock, you would place a buy order through your brokerage account. Your broker would then execute the order, purchasing the shares on your behalf at the best available price. Section 6. Trading strategies for beginners. There are countless trading strategies that investors use, each with its own level of risk and potential reward. For beginners, it's generally advisable to start with simpler strategies and gradually explore more complex approaches as your knowledge and experience grow. One popular strategy for beginners is buy and hold investing. This involves buying high-quality assets and holding them for an extended period, typically years or even decades. The goal is to benefit from long-term growth and ride out any short-term market fluctuations. Another strategy is dollar-cost averaging, which involves investing a fixed amount of money at regular intervals, regardless of market conditions. This approach helps to average out the purchase price over time, and reduce the impact of market volatility. Section 7. The importance of research and staying informed. In the world of trading, knowledge is power. Before investing in any asset, it's crucial to conduct thorough research and understand the risks involved. This includes analyzing financial statements, tracking industry trends, and staying abreast of market news. Fortunately, a wealth of information is available at your fingertips. Reputable financial websites, investment publications, and even educational platforms offer valuable insights and analysis to help you make informed trading decisions. Section 8. Tips for beginner traders. Starting your trading journey can be both exciting and daunting. Here are some essential tips for beginners to navigate the markets with confidence. Start small. Begin with a small amount of capital that you can afford to lose. Diversify your investments. Don't put all your eggs in one basket. Spread your investments across different asset classes and industries to reduce risk. Manage your risk. Use stop-loss orders to limit potential losses and avoid emotional trading decisions. Be patient and disciplined. Trading is a marathon, not a sprint. Stick to your strategy and avoid chasing quick profits. Never stop learning. The financial markets are constantly evolving. Continue to educate yourself and stay updated on market trends. Section 9. Conclusion. Embark on your trading journey. Venturing into the world of trading can be an empowering experience, offering the potential for financial growth and the opportunity to participate in the global economy. By understanding the fundamental concepts of financial markets, exploring different asset classes, and adopting a disciplined approach, you can navigate this exciting landscape with confidence. Remember, every successful trader starts somewhere. Embrace the learning process, stay informed, and never be afraid to seek guidance from experienced professionals. As you embark on your trading journey, keep in mind the words of the legendary investor Warren Buffett. The stock market is a device for transferring money from the impatient to the patient. With patience, discipline, and a commitment to continuous learning, you can position yourself for success in the dynamic world of financial markets.